Hi guys, welcome back. Now, if you see the performance of banks since the vaccination news was announced in November 2020, you realize that they've done pretty well, correct? So they've all done about 40% plus minus. And in May 2021, I actually released a video suggesting that are banks still cheap or not? Because there are a lot of questions whether banks, are they too expensive to buy? Are they still a good investment? So in that video, I've actually suggested that probably it's not that expensive yet. And my conclusions then were, if I had to take a pick between the three banks, I would probably prefer OCBC simply because its ROE is good, its price to book value looks reasonable. So let's see the results of things. So since May 2021, we realized that all three banks have increased, correct? OCBC has increased 4.5%, UOB has increased by 8.5%, and DBS has increased 9.5%. So I actually picked the worst of the three. Maybe I should keep my mouth shut from now on. I really don't know what's going to happen for next few quarters. So leave your thoughts and comments. Who do you think is the best of the three banks in the comment sections? I'll avoid suggesting who I'll pick, maybe because I'll jinx it. So let's move to more serious portions. The key thing about this video is MAS actually removed the dividend cap that was put in place because of COVID-19. That was in July 2020. And in the private members video, I actually did mention that this is a possibility that the cap will be removed, and indeed the cap was removed as of end of July. So these are the latest dividend numbers coming up from three banks itself. Do take note also, DBS is the only one that produces quarterly dividend. UOB and OCBC are both half-yearly dividends. And if you look at this year's versus comparing against 2019, because 2020 was the one with a cap, correct? So if we compare between 2019, this year 2020, you realize that DBS has increased the amount, UOB has increased the amount, but OCBC is the only one that kept it at 25 cents. They were the only one that didn't give an increment to pay. So maybe the market was disappointed. That's why OCBC's performance relative to its two other competitors was the poorest. But in that case, I at least got the direction correct, so don't feel too sad about it also. But the main thing is, let's look forward to 2022, where everything is normalized already. What is the dividend yield, especially if you want to be an investor as of today? This is actually a report done by CIMB. You realize that UOB remains the best dividend player, paying about 5.1%. OCBC, if it still does not increase its dividends, is still going to pay at least 4%. So a key question that we should all discuss about is, will banks pay more dividends for next year, and will it cause the share price to rise? So let's break down this question into two parts. Will there be more dividends? Firstly, to note, non-performing loans seem to have stabilized. Banks, they take on deposits and then they give out loans and then they earn a spread. Some of the loans, they go into default. So non-performing loans, if it stabilizes, it means that they don't lose money for those portfolios. So if you see over here, non-performing loans seem to have stabilized across all three banks. And UOB actually has the biggest exposure to ASEAN countries. And as we know, Malaysia and Indonesia is still combating COVID-19 by quite a lot. Their economies are still ravaged, unlike in Singapore, whereby we have kind of gotten used to work from home. I think these two countries are still some way around from normalization. Then the second part about more dividends is, what about the net interest margin? If we look at the net interest margin for OCBC, for example, you realize that this has started to inch up, correct? Now it's at 1.58%. Previously, it was at 1.6%. And OCBC, with Bank of Singapore as its wealth management arm, as well as Great Eastern as its insurance arm, it does not rely that much on net interest income, unlike the other two banks. So all three banks do benefit. So if net interest income does trend up, all benefit, possibly DBS could benefit the most. So if the question is there going to be more dividends in 2022? I think the answer is very likely yes. The odds are quite good for it. So if we discuss about share price being better, the next question is, what is the price to book value right now for the three banks itself? So let me pull up this summary table for you to see. And in this summary table, you realize that I've also plotted in the market cap. I'll explain to you in a while why. If we look at it, the three banks have trended upwards and they look to be at the higher tier of the price to book value. DBS, for example, has seen its price to book value now at a record high already. But a key factor to it is, if you plot it against the market cap, you might see a price to book value expansion to things. And that could mean a few factors. First, the market is willing to pay more for such an asset. Banks, they are very stable, inflation proof in a lot of ways. Second part is market is expecting the book value to grow in the coming few years. That's why they are willing to overpay a bit more as of this moment. These could be some factors, and it's something that I teach in my course. If you're keen to learn how to do research as well as understand stock market, look for the course links below. I think I can help you with that portion. It gives you a good framework how to invest properly if you are looking to do stock investing. So with that, let's move on to conclusions. Firstly, I believe dividends for 2022 look good. They would, at least in my opinion, be at the same level, and there might be a good chance that it could be slightly increased. Then what about share price? Nobody knows. But if you are bullish on banks and you don't know which one to buy, as usual, buy the STI index. But I have a special surprise to suggest to you. If you're really keen about banks, you want to be diversified and you want more weightage in banks, I've actually found this fund that has 48% into the 3 big banks mentioned already. This is Aberdeen Singapore Equity Fund. As of this recent moment, they have outperformed simply because banks have outperformed. So this fund itself gives you diversification as well as an overweight versus STI's weightage into Singapore banks itself. So with that, hopefully it's benefited you. Smash the like button and check out the previous video I've done before in May 2021. It gives you a much better perspective understanding the big 3 banks in Singapore. So with that, I'll sign off from here and see you there. Take care and goodbye.